The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners out there had a fun and exciting weekend, and you're back and ready for another wild week in the markets, thin volume or no. My name is Mark Longo from the OptionsInsider.com, as well as the old Options Insider Radio Network and our ever-expanding spectrum of programming. And I am joined today by the usual rogues gallery of characters with one new face to the crowd. And since he is the new man on the totem pole, we will give him pride of place and introduce him first. Holding down the Options Express hot seat today is none other than good old Alex Jacobson. Alex, welcome to the program.
Thank you, Mark.
And what is your title over there these days at OX?
Long story, short story, I am simply a vice president, which when I tell people that story, they go, there's got to be more to it than that. I have the simple title of VP. I was brought on here a few months back after being in the exchange community for the better part of 3 decades. And I'm actually working on building a very kind of large, innovative education product. So that's what I'm doing.
Well, that's good to hear. I know Joe can always use a hand over there. He's stressed to the limit a lot of times over there in the education department.
It's got a very full plate. But I don't want to turn this into a Valentine for what I'm doing, but what I've basically asked to do is take my almost 30 years of experience in the high net worth and institutional community and see if we can translate those skill sets into something for the retail customer. So I'm kind of the option horsepower behind the project, and then there's computer developers and software designers, and say it's not something that's ready yet, but we're very excited about what we're putting together.
Yeah, listeners, if you don't know, Alex has been around the block a few times. He's been pretty much with every major options entity around. You were with the CBOE back in the day, most recently over at the International Securities Exchange, heading up their education over there, and quite a few stops in between, I'm sure, that I'm leaving out. But if listeners don't know, Alex has been, he's been around the block, shall we say, in the world of options.
Yeah, I have actually been in the Chicago derivatives community since before listed options trading. I was actually a charter member of one of the exchanges when financial derivatives were first starting. I had the good fortune, I won't bore you with kind of my history, but I went to the University of Illinois Chicago Circle, which is the campus you can see from right downtown, and I was a student there from 70 to 74. If you think about it, those are the formative years of the financial derivatives community in Chicago. It's the beginning of the CBOE, the beginning of the IMM at the CME, and the financial complex at the Board of Trade. And my finance professors at Circle were the University of Chicago PhD candidates who were literally writing the models and establishing today what's the modern financial derivatives exchange, and I got $1 million education for about $200 a quarter. A lot of it was right place, right time, and I'm very fortunate.
And all you had to do back then was just buy one Cboe seat back in the 70s when they launched and put it away and collect those leases all of those years and then dump it when they were $2 million. And Alex, you would have been done, my friend.
Yeah, well, think about this. When I was coming out of college, there were 3 seats you could buy. There was the Mid-Am, which was an old mini contract exchange. The seat was $6,000. There was the Cboe, which was $10,000. To give you a sense of history, no matter what anybody ever tells you about the exchanges, they couldn't give the seats away at the beginning. In fact, the Cboe offered the seats to the Board of Trade members and said, give us $1,000, and if it kind of takes hold, pay us when you can. But the Mid-Am seat was about $6,000. The IMM seat was $10,000. The Cboe seat was $10,000, and the general betting of what I'll call the existing derivatives community was none of these were going to work, and all of them were incredible success stories, except for the Mid-Am, the cheapest seat, which was folded into the Board of Trade a number of years back.
Someday on the launch a new show, I'll call it Options Stories, or perhaps Options Fireside Chats, and Alex and I will reminisce. Well, he'll do most of the reminiscing.
Yeah, and Kavanaugh's 15-minute segment of that show will be called Another Broken Dream, because you can guess which of the 3 seats I bought. So
you had a Mid-Am seat, right?
Over there.
Listeners may recognize that voice. That is none other than Auntie Mike / Grandpa Mike Kavanaugh, filling in yet again for the Uncle Mike Tusaw. Is he on vacation these days? What's he up to over there?
We've got him out in the St. Charles office, a little closer to home. Summer's winding down. Kids are getting back to school. Why not keep him close to home?
Keep his commute short. Well, I'm glad you could fill him in for him, sir. Hopefully there have been no injuries prior to recording, so you are at full strength.
Full strength it is. Yeah, we haven't had any pre-recording injuries since the one mishap about a month ago.
Since the pinky amputation fiasco of 2011. All right, and listeners, last but not least, we are also joined by the Seabass, a.k.a. the manager of the Mini Metals, sounding thick and lustrous like a man's grooming product. None other.
Much like my chest hair.
Yes, exactly. As you listeners may tell, from Mark, who has called into the show many times via cell phone from numerous locations that were not exactly conducive to audio, that Mark is sounding better today. He's upped his game quite a bit. And he's using some professional audio equipment for a change. And we all the listeners, I'm sure, appreciate it.
I was basically blackmailed into it. I was told by Mark, you have 2 choices. You can no longer be a part of this podcast or go out and get a decent USB. And I said, well, all right, I'll get the USB, Mike. All right, fair enough.
Our listeners, I'm sure, will be thanking you for it as we go along.
Is my voice clear really a good thing?
That's true. I'll leave that up to the listeners to debate. All right, and with our intros set and the team firmly established, we will roll right into the trading block.
The trading block.
And welcome to the Trading Block. This is, of course, the portion of the show where we discuss what's been moving the markets, what's been lighting up the tape today on the street. And it was indeed a day where the bulls were out in force on relatively thin volume today. We didn't see much in the way of paper, but we saw a lot on the other side in terms of direction. The S&P closed up about 3% or 33 handles to 1210. The Dow closed up about 250 to 11,539. The tech-heavy NASDAQ leading the charge for a change. Tech's off to the races today, up 82 handles to 2562. And the good old VIX cash beginning its slow progress to the downside, closed down 3.3 handles or about 9%.
I love that you consider the fact that it's dropped 9 handles in the last 2 days slow progress.
I'm just saying it from your perspective. I'm sure it's slow because you wanted this to happen much faster and much larger magnitude, perhaps last week or a week or two ago. So I was more more teasing you than anything else.
I appreciate you rubbing it in. But,
yeah, it's coming your way. It's coming your way. It's moving your way. Slower perhaps than planned, but nonetheless, the inexorable sell-off is coming your way. Are you still? Did you roll up any of those puts, or what'd you do over there?
Well, rolled up some puts, rolled some of it into XIV because it got to a point where a 3-month put in VXX, vol was so high that it was actually more expensive than owning XIV outright, which doesn't really have an expiration date. So it kind of turns into a no-brainer.
Doesn't make much sense at that point. Yeah.
Right. Well, and actually, we were actually messing around in ZIV until the roll yield started to calm down. Now that the roll yield's kind of fallen back into place, we're starting to fall back into place. We're moving back toward a lot of XIV. So it's been kind of a progression, if you will. But in terms of XIV, I think I'm net long. I'm still down about, I would say, 50 cents from where I'm net long at. So I would like to see a little bit more movement, which no doubt is coming, but it's going to take some time.
Yeah, it's got a little bit ways to go. If you watch the futures, they're all still picking for a sell-off below the 30 handle. So it's coming. You got to hold your horses. You can thank Irene for, of course, pumping up those vols and then smacking them off to the downside when it didn't really wipe the East Coast off the map, as a lot of the dire naysayers had been predicting going into last weekend.
It was totally wag the dog again, just like everything else. I mean, it's ridiculous. And I'm not saying that we shouldn't have that the VIX didn't kind of belong around 30 over the last couple of weeks, but this has totally been. They need something to talk about, so hey, let's drum up whatever we can. So, I'm not saying that there's not some still real fears out there, but I don't think QE90 or Hurricane Irene were worthy of the VIX being over 43. European debt, maybe, but QE 12,000, not as much.
The old Bernanke put we were all hemming and hawing about did not exactly come to pass. So Mr. Uncle Ben, and not exactly stepping in to save the markets yet again, he just gave them his platitudes and a nice little pat on the back and said, go your way, young man. Go forth and prosper.
Isn't platitude something a badass platypus has?
Yes, that's exactly what it is.
Got platitude?
Those angry platypi you have to watch out for.
It says, I'm a mammal, but I lay eggs.
I think this might be your first digression into species-related humor. We usually have the 80s references, but and the bad analogies. This might be the first species evolutionary type of humor from Mark Sebastian.
I watched a lot of nature this week.
I could see you were watching the old Discovery Channel. Go ahead.
One point I want to make with the phase-in of the Volcker rule now, you're losing a lot of prop desks, which means I think the swings you're going to see in vol are going to be much different than what we've experienced in the past. I mean, I don't want to get into the politics of the Volcker rule, but you have less money being able to arb this stuff until the prop desks reestablish themselves. And I think that's been a big contributor to the volatility we've seen in the last 3 weeks. You still have a lot of high-frequency desk. You've lost a lot of prop desks. And I think the swings you're going to get, both in the market and in vol itself, are going to be exacerbated here.
Don't you think that losses, though, of those prop desks is pretty much those are gone for good? I mean, especially the small, the mid-sized prop shops. Do you see a massive return of options liquidity providers or prop shops in the near future, or even in the far-off future of the options market, Alex?
Well, look at this. This city has suffered. Right? I mean, if you look at the traditional mid-size option market-making firms in the city, they are a shadow of what they were 3 or 4 years ago. But you also got to look at the bank desks now. I mean, the bank desks now are phasing in the Volcker rule, and I don't know the timeline of phasing that in, but that takes a lot of capital and a lot of talent out of the market.
Well, Alex, one thing that you should think about, though, is that a lot of the so-called prop shops are gone, but have converted more into customer accounts anyway, due to all, how, there's really no point to being a prop shop anymore because of bid-ask spreads and different things like that. A lot of these guys have set up customer accounts and are now on the getting paid side as opposed to the paying side of order flow. And if you look at how much liquidity was there during this sell-off, it's not like the liquidity wasn't there. So, I mean, this was literally just one-sided selling. That's one thing to think about.
Well, yeah, but in my old days when I called on institutional desks, I know dozens of those people that are still in the process of setting up their new operation, and you have billions of dollars of capital that just isn't there now. I mean, it's just sitting out, and I think that will be a problem for a while. The irony of it is some of those people are now setting up with capital from VC firms, and it's changing the whole character of it.
You gotta love a VC firm that backs market making shops. They're maybe a little bit late to the party.
Yeah. Well,
there are no market making shops anymore, except for it really is customer account. Anybody that calls themselves a real market maker is probably kind of a quasi. They probably have a customer account too. Is kind of the interesting thing. So.
Yeah, I wager they're taking as often as they're making these days.
Exactly.
And of course, Mr. Kavanaugh, it was another wild ride in the metals today. Were you in charge of rolling Uncle Mike's puts while he was off basking in the glow of St. Charles?
Yeah, we were. We didn't do anything. I mean, we were still pretty open on the upside, so we kind of looked at this short term. We had tightened the puts up late last week, so we kind of benefited from an early roll last week. So we didn't do any rolling today.
So I guess the listeners probably want to know, what's the game plan then? How much of a downside move do you think you're gonna look for in gold before you'd think about rolling those puts back down and taking some of that money off the table?
I think it's a combination of time and how far down it goes. I'm just looking up a couple of accounts here to see where exactly the new position is. But in the short term, what we don't want to do is become day traders where we're, if you're getting 10% swings in gold, we don't want to be getting caught in the fray where we're rolling down puts on a daily basis. So we kind of make the adjustment that we're good for 3 months at this spot. And if we need to roll again, we'll roll again, but we're not going to do so. What was gold down today? $3.50 on the GLD. Right now, we're nestled in. We're long the 165 puts. We're short the 178 calls, and we own the underlying. And this is all front month. We're in September. If it comes rifling down hard, we'll take a look at potentially keeping a 8 to 10% buffer on the downside and not looking to be too active. So if it drops down to 150, I'm sure we'll take a look at making an adjustment. But right now we're in the 165 puts, long the underlying, short the 178 calls.
So you're rolling front month then. So you're prepping for some near-term downside. You're not going out and picking up a Jan 2013, 170 puts or anything crazy like that.
No, we kind of made the conscious choice. We had been long the back months for a while here, not only on gold but on the indices. When the vol cranks up as high as it did, we start shifting that longer protection back into the front months just to get some of that Vega exposure off the table. Try to benefit from the Vega when it's low and there's an increase by being long the back month puts, and then rolling it in to try to take some of that Vega risk off the table.
Certainly makes sense. I'm sure your customers or your clients are appreciative of that in this environment. They have someone to attend to their needs so nicely, so to speak. And since Uncle Mike and Mr. Grigas and Tim and all the rest of them are not here, I guess we can skip the commodity rundown for today unless you want to dive into some of that, Uncle Mike.
The commodities were not that exciting today. I'm sorry.
Except for the metals, really, there wasn't much going on. Of course, I always love my bail update. I can't bail on my bail.
Exactly, and gold's going to start to kind of level out once it gets back to where it belongs relative to something like platinum. Is really kind of the story, and until then, we were actually, it's funny enough, we're doing kind of some branding of our product lines, and we were talking about the bronze, silver, and gold and platinum packages, and I looked at my business partner and I go, do we need to go bronze, silver, platinum, gold packages, because gold's gotten so expensive that it's been popping over platinum. Of course, the answer is everyone still thinks platinum is more expensive. But boys, if you're looking to buy your your special lady some jewelry. Go with the platinum right now. I'm telling you.
It's cheap. She'll say, "Why are you buying me this?"
5 years from now, it'll be cash for platinum.
Platinum is your barometer for all these days, it seems like.
Well, I just think where that trades relative to gold makes a lot more sense to me than the silver gold trade that Mike and Mike were kind of talking about several months back. I think silver and gold have completely separated from each other, and silver is being traded like the industrial, and gold like as a replica for currency. So how it trades relative to platinum is actually going to be the thing I'm going to be watching.
Platinum is that nice Goldilocks metal right in between there. Just right. Just enough industrial, just enough, a small base of retail, so you can kind of take your pick on both there. It hasn't been corrupted to one extreme or the other. All right, and with our metals talk complete, because we have to have that every show, we're going to close out the old trading block and roll right into the odd block.
The Odd Block.
All right, and welcome to the Odd Block. And listeners, if you're always wondering why we're laughing when we do the intros to each of these different segments, because something absurd usually happens in the transition period there, and it's usually from Mr. Sebastian. But this is why you need to listen live and enjoy all the goodness on that side. But this is indeed the Odd Block, where we talk about the interesting and or the unusual options activity that's lighting up the tape today. And it wasn't a huge unusual activity day, so we're going to run through some quick highlights. Starting off with good old Amazon, closed today at 206.53, up like many of the tech names, up quite a bit, up about 3.5% today on the day. And this is the name that's been fluctuating, vacillating around the 200 handle for a little while now, given all the movements in the market. So yeah, today, but what we saw, interestingly enough, despite this size move, a relatively sizable move in Amazon, is we saw people still putting their money where their mouth is, thinking that there's a lot of upside to go here in Amazon. We saw nearly 2-to-1 call to put ratio on Amazon today, and the bulk of the activity was substantially upside calls. We're looking at the SEP 225s. We're lighting up the tape today with more than 6,000 of those going up today on a previous open interest, just a couple thousand. And the bulk of them were purchased, lifting offers, about 4,400, 4,500 of those were purchased around the $1.21 level. So, and these are SEP calls. So a lot of people thinking that Amazon has some upside ahead of it. Of course, you get the stock up to rally about 10.5% for those calls to even start looking profitable. And today on the day, it actually wasn't a heavy volume day, like we said for Amazon. Like we said, today was a relatively thin day. This is the name that's been averaging about 72,000 contracts a day. They only did about 65,000 today. So from a pure volume perspective, it wasn't lighting up the tape. But for some interesting upside in Amazon, I know we talked about Amazon in the show in the past, and I've always been a bit of a bull. I know Rob has as well. I think Sebastian, you have as well. I'm not sure if I'm going to be loading up on the 225s right now, but still, I do, of all the names out there, we talk about Apple quite a bit. I really am, I think, most intrigued by Amazon these days. I think they have a lot going on. They don't have an ailing and or vanishing founder. They don't have a lot of the other issues I think you could attribute to Apple. And they have their fingers in a lot of pies, which I guess can be both a negative and a plus. They really are quite diversified these days beyond their old core of just being a online retailer. And so there's a lot of interesting things going on at Amazon, and there's some substantial upside bulls backing me up here in Amazon these days. Before we move on from Amazon, any of you guys been watching Amazon or playing around in Amazon lately?
I haven't been watching Amazon at all, but just looking at it, the volume today, I mean, there are over 7,400 contracts on the 225, like you pointed out. I mean, there's definitely some action there. I'm looking at it. I don't know if 225 by the end, the third week in September is something that I like, but just looking at the risk to reward of it, a 1x2, selling the 220 call to buy the 225, you could sell one to buy two. That looks like a pretty good risk to reward to me.
Yeah, and you can do it on a credit. That's the old KYO ratio 1x2 strategy that you guys love so much over there these days. And that would be a good one too if you don't think just coming out and outright buying the upside 225 lottery ticket is for you. That's a more nuanced way.
Well, what about the now? Are we sure they bought these calls? What if this was attached to something along the lines of? Let me take a look here. I'm kind of interested in this trade now because I'm thinking the same thing as you. Why would somebody come in and buy these? They don't have earnings coming up, do they?
No, they just had earnings back on the 26th of July, so they're not due again for a few months.
Yeah, no, I'm looking. Let me see, 225s. I'm looking to see if I can figure out what this guy was trying to do because I would love. Yeah, you know what? I will.
Yeah,
bet
he was definitely buying these.
You know what? It's interesting. I'm seeing them trade over AutoX on the sell side on LiveVol. Maybe I'm wrong. How many did he buy? Did we look?
How do we know
sorry
it was a he?
You know, I'm seeing a bunch get bought through the system. You're right. The guy just bid him up on. You know what? You're right, but it was all auto execution, and then he started bidding for him, and he paid up. Looks like 10 at a time. This guy started buying them. This is the classic. What the heck was this guy thinking? Because
maybe his clerk hit the button while the guy was out at lunch and just.
No. This is the classic. I think I'm going to be sneaky and buy 10, 15, 20 at a time, and he ends up running the vol up to. You know, these are trading 163 or whatever, when he could have walked into the pit and paid a nickel through the offer and gotten filled across the board. I mean, it had been no problem. So, you know, it's kind of the classic customer. Although, you know, this thing did catch a bid, and he almost he's already up a nice chunk of change on his total order.
Yeah,
so,
and I'm looking here too. The vol is up on that strike today, so he definitely lifted those. Yeah, he wasn't hitting any bids out there.
Yeah, but you know what? The interesting thing is now that this guy's run it up, a lot of times that'll actually put you in a position to use that guy's order against him. So, you know, that actually might be a decent one to put a call spread on or something along those lines.
Yeah, maybe you do the ratio, but you do it on the 225, 230 instead and take advantage of him picking up that one strike. I mean, 220 would work too, but
buy the 215s and sell the 225s. What about that trade? You know, do a 1x2. The other way.
Yeah, there you go. If you're feeling that the stock's going to be rallying anywhere near that range, then yeah, you can take advantage. Either way, you want to be on the selling side of that strike. I don't think you want to pile in after this guy.
Yeah, well, we all know that upside calls never lose.
This is another more proof of what we've discussed on the show many times in the past, that the size money is quite often not exactly the smart money or perhaps the nuanced money, particularly when it comes to options. They tend to do things like this where they just are their own worst enemy more often than not. And I thought this was an interesting one to highlight for a number of reasons, not just the fact that it's bullish in Amazon, but because it is so indeed so unusual. And that is what we talk about here, and we'll flip over to next one up on the tape is IMAX, ticker symbol, not surprisingly, IMAX. They closed up about $1.50 today, or nearly 10% to $17.73. And we saw call buyers in IMAX as well today. Of course, the tech lifted everybody. IMAX, not really a tech name, but they are kind of thrown out there in conjunction with tech a lot. They were up nearly 10% in the first 40 minutes of the day today, as this thing just kind of gapped up. And we saw the SEP 20s here, and more upside calls were lighting up the tape today, with about 1,400 of those getting picked up for about a quarter. This is the name that does about 2,000, actually about 2,800 contracts a day. They did over 7,000 today, so a relatively sizable day for IMAX today. Let's see, we also saw about 3,800 total, actually, of these SEP 20s going up on previous open interests of about 2,000 on that strike. And it looks like they purchased, just in the morning session, about 2,700 of them for about 40 cents. And let's see, the total on the day was, about 4,300. The SEP 20s went up. So another one where this guy's looking for a sizable gap up in this one. I guess you think he would do this maybe before the summer 3D movie season, but apparently he thinks the fall and Christmas seasons will be strong for IMAX as well. This guy obviously needs a gap up of about nearly 16% for these calls to light up the tape for him. And you guys watch IMAX before I roll on?
This one kind of seems a little bit even more odd than the Amazon trade. I mean, you look around the strikes surrounding this one, and 300 traded, 200 traded, 35 traded, 4,300 of the 20 calls traded, and there's nothing in the back month even close as far as open interest goes. I mean, I looked out to January 13, and the biggest amount of open interest was about 1,000 of the Jan 30 calls, the Jan 2013 30 calls. So this one to me is just a baffler.
Yeah, he's not spreading, he's not rolling, he's just looks like he's naked lifting his calls.
You know what, Mark? I just did notice that Transformers 3 is doing a limited run in IMAX starting next week.
Well, there we go.
Just saying, that could be
I think he's then if that's the case, then SEP 20s is way too conservative. I would pick up the SEP 25s at least. I mean, that's Transformers money we're talking about there.
Absolutely.
That's a quality film.
Guys, I'm late to the game, and I should have done a little more homework, but I think the Amazon trade today is probably the layoff of a structured note. I was traveling last week. I was actually in Las Vegas, and somebody was showing me some specs on what I think was the structured note on Amazon. So I'm not sure, and I need to do more research. But to your point, Mark, a lot of times a lot of these big trades don't work out. But often a lot of these big trades aren't kind of prima facie what they look like. I mean, if you read the SEC research, remember the qualified contingent cross? I don't know if you talked about that at all.
That was a big, I'm sure a big concern of yours back when you're in your ISE days.
But one of the things in the SEC research was they showed a huge proportion of large option trades weren't simple directional trades. They were delta neutral trades, or they were structured. I mean, it was some surprising number. It was some number like, I think, more than half of the trades over 1,000 contracts weren't what they looked like, or ordinarily. And my experience is that's commonly the case. I still think it's an amazing thing to watch, to look at the large blocks, but I'd have to do a little more homework. I think the Amazon is probably the hedge to a structured note.
And he's buying the calls to hedge the note. Then that would be interesting to see.
Yeah, I mean, there's an enormous business done on Wall Street of bundling, what we'd call 90/10s or call spreads or structured buy rights into notes, and then selling them out into your retail distribution system. And most of the major investment banks craft these things, and I don't know why it just sticks with me. I had both of my nephews now live in Seattle, and both at one time worked at Amazon. They don't now, but I have sort of a heightened sense to watching news on Amazon, and what I recall is that might have been, or it might be the hedging of the note sale.
This is why we call it the odd block, because there is indeed no right answer, and a lot of this activity is indeed quite odd, which is why we like to parse the tea leaves here. And like I said, there really is no way of knowing what the counterparty is up to, which is why we like to kick these trades around quite a bit. And you're right, quite frankly, they are, especially the large block ones, are usually tied, usually delta neutral. You don't typically see delta neutral going up in 10 lots and 5 lots, but maybe he's got a new way of doing it. He's hedging 10 at a time. But this could be it would be interesting to see if he was indeed unwinding his other end of a note in the retail space.
Yeah, he's trying to be sneaky. I mean, that's the way usually, these guys that are trying to be sneaky end up getting themselves and paying a lot more than the guys that aren't. But if it's a big structured note, he's probably making enough. He doesn't mind paying up. That's actually one of the nice things is you'll see these big cash spreads go up in SPX where the market makers are actually doing pretty well on the trade for once. And usually it's because the guy did so well on some sort of variance swap or some sort of upstairs trade that the guy doesn't mind doing the cash spread and giving up a little bit because he wants to lay off that risk so bad.
Yeah, absolutely. And it's a yield environment where these notes are picking up a lot of traction again, especially some of the call spreads and the pseudo buy rights. It's real attractive for the selling groups because there's simply no yield today, and you had a market that's just been beat up so bad that some of these, upside targets, stuff that's 8, 10, 12% out of the money is still below the high for the year. So it's the right environment for that stuff.
And before we close out the odd block, there's one more I want to throw in there. It's actually happened on Friday, and obviously we don't have a show on Friday, so we couldn't talk about it, but it was interesting nonetheless, and it was a little one. I know Mark Sebastian appreciates these little names. This is Sealed Air Corp, ticker symbol SEE. They closed today at $17.42, up about 40 cents or about 2.5%. This is a little name in pretty much every capacity. They trade usually about a few hundred contracts a day, and on Friday they did over 10,000. So a size day for C. About 9,600 of those contracts were call buys, and these were the Jan 17 halves. So someone came in and pretty much lifted about 10,000 of the Jan 17 halves for $1.32. And this was all opening paper. There's really no open interest to speak of on any of these strikes nearby. It was 38 times the average daily volume for this stock. This is the name that's been beaten down quite a bit. They're down about a third of their value since the beginning of June, since they announced an acquisition earlier this year, and I guess the market not exactly a huge fan of it. So this is obviously some trader who thinks that the best days are indeed ahead, and this acquisition is off to the races for SEE. Give himself a little bit of time out till January, but nonetheless, picking up nearly 40 times the ADV worth of calls in one fell swoop here in SEE. So again, this one hit a 52-week low of 1620 on Friday, I believe. So this one's had some up movements even since last week. So this one, obviously, people thinking the best days are ahead of CLED. We wanted to just put this one on the show because it is such an unusual one, and it's worth watching to see if this sizable amount of paper is going to pay off. This is also could be an earnings play, but it's a fairly far off one. The earnings are indeed in the last week of October, so he's got a little bit of time on that. But nonetheless, huge call volume in CLED. And that is going to close out the old odd block for today. And now we're going to roll right into the Express block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OX Radio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express Block. This is the portion of the show where usually John, Tim, or Rob will take the reins and walk us through what's been going on, what's been lighting up the customer tape, what's been lighting up their phone bank over at Options Express. But Alex has a little bit of a different perspective on the Options Express world. So Alex, what's your take? What's been going on at OX from your perspective these days that you'd like to share with our listeners?
Interesting, that's kind of curious to me, is I came in here without a background or a big history in futures, and the retail appetite for futures, not only the golds and silvers, but the grains at new highs and futures options have gotten a lot of traction here, and you see a lot of volume being done in that area. It actually kind of fascinated me when I came in here, being kind of a traditional options person, to see the appetite that had occurred now in futures business. And a lot of what we're seeing lately is, I mean, just the thing that, you guys have talked about, the gold trade hedged, the buying of the futures contract and somebody buying a couple puts to kind of put on a pseudo back spread. But we're seeing a lot of that, a lot of appetite. I mean, a day doesn't go by where you don't talk metals or you don't talk, the grains at new highs, the dollar, interest rates, the 10-year down at 2.25. A lot of interest in that area. But that's what's, kind of what's happening here now.
It's interesting you say that because, like I said, we have been doing this show for quite a while. And when we first started off, I assumed, I think like you when you came into OX, that it would be a full options rundown every time on the Express block. And I have to say, at least a third, if not a half or more of their time lately on the OX Express block and even in the trading block has been devoted to the futures and the futures options and the commodities, just because that's where the action is these days. Obviously, OX acquired Express Trade years ago, and they've been slowly ramping up their futures functionality. Now they've added Forex as well, so they've taken additional forays down that road. And that definitely seems to be where the emphasis is and where the growth and expansion plans are for OX right now, is in that futures and futures options realm.
Yeah, well, plus it's a pure play. And again, if you go back to my institutional experience, people would say to you, well, how do I do this? By the way, I can't do futures. and you try to craft a solution using something with an ETF or, some pseudo futures contract. And the truth is, if you can get a pure play, which you can, and trade it on an electronic platform, I don't want to turn this into a Valentine for OX, but universal accounts, the ability to hedge, the ability to now trade not only the future, but options on futures. When I grew up, options on futures were like a country club. Did that trade today? I remember being on a desk many years ago, visiting a desk in New York City, and they were trying to get a quote on, it was either a COMEX or NYMEX option, and they called down to the floor, and the broker who answered the phone literally said to them, the guy who does the options isn't here today. Call back tomorrow. Now, I know that was a long time ago, and I know it's like a bad old story, but the world has changed today. And the ability to trade futures and futures options with the same, quick ease of what electronics brought to the options market, it's been a boon to them. I remember the first days of Raise on the Cboe floor, and I'm not going to spend a lot of time reminiscing, but I worked at Merrill Lynch here in Chicago in the high net worth in the customer area, and you'd put an order into the OEX at 9:31. You'd get filled at 9:31 in 12 seconds, and you'd get reported at 2:40 in the afternoon. And I remember the Cboe team coming in to pitch us on Raise and electronics, and to prove them wrong, I put an OEX order in. And back then, the wire operator in the office, there was a wire operator, actually had a teletype machine, teletyped the order in, and the machine clattered back instantly. And the only thing that ever clattered back that quickly was a mistake. And this was a fill. So the character change and the ease of trading futures and futures options has allowed people to go to the, pure play. GLD is great. SLV is good. But, if you really want to trade the pure play and hedge it with an option on it.
If you're hesitant to turn it into a Valentine for OX, then allow me to do it for you then. With just that one point you mentioned about the universal accounts, because we have seen so much feedback on our end from users who have started using these here and at other firms, and just because that was always the traditional hurdle to the futures market, particularly for retail, was I don't want to open up another account and go through all that aggravation. I'll just stick with the options and the ETFs and I'll be fine. And so now by allowing that all to essentially fall into one holding tank, as it were, it really has eliminated that last big barrier for retail. Now, especially in the last few months, when we've been seeing things like the metals and ags lighting up the tape in ways that I can never recall, at least not in recent memory. That's
yeah, absolutely. Well, you think about it. You call on a hedge fund or you talk to a hedge fund, and they'd say, I want to trade the 10-year, but I'm going to trade it via the Lehman, ETF, and they'd say it's not a perfect set of outputs, and say, why not just trade the 10-year? It's so easy to do today. And in a universal account, you're getting margin, the equivalent that you used to get from a prime broker, and it's changed the whole playing field.
All right. Well, thank you for that, Alex. And maybe on another show when we have you back, we can talk back more about the good old days or / bad old days of early Raise. I know I can recall, I'm sure many of the panel here can recall the days of the Raise bandits and all the black holes they left in our accounts in those early days.
Yeah, it was hilarious. And but you say that, but in the end, Raise was a huge boon to traders. It was so much better.
On net, it's been great. I still have some black marks of some 100 Delta calls that were left sitting on me.
I love that they called the Raise bandits when they should have just called them Timber Hill.
Ouch.
Oh, I'd sleep with one eye open and have your wife start the car. But think about this. I was a broker at 33 West Monroe for Merrill Lynch in the early 80s. I was 3 blocks from the Cboe, and I couldn't get an order reported back. So I would have a customer who would say, buy 100, get me a report. Let's buy 100 more if this happens. You'd put the order in and not get the report until after 2 in the afternoon, because Raise didn't exist and the OEX was so busy. I remember in my early days at the Cboe, when you had days where the OEX was doing 1 million contracts a day, and it was running efficiently, it was running well.
And that was before the market makers just abused people that so bad that they finally said, enough, I'm done with it, and moved on to the SPX.
Yeah, well, back to the reminiscing page. Most of you guys are not old enough to remember this, but when the CBOE first listed the SPX, anybody know what happened to it? It failed. We brought it down. The SPX was a failure, and the CBOE brought it down and reconfigured it. And today it's, I think, the most active option trading in this, certainly at the CBOE.
It is. Oh, it's most active. It's the most active option out there in terms of notional values traded on the equity side, I believe, in the world, right? I don't know. That might be.
Yes, I mean, because it eclipses, I think, the next how many hundreds of classes of equity options, I think, combined in terms of notional value.
Yeah. Now, there are definitely futures contracts that trade much bigger notional values than SPX, euro dollars, for instance.
I'm talking options.
But if you're looking, euro dollar options do just incredible volume. But in terms of equity options, nothing even comes close. And then if you add in, think about this. If you take SPX SPY, ES options, SPZ options, and all this, and maybe throw in OEX, you're probably, of all the equity options that trade, you've probably just pulled in 30-35% of the total volume, and certainly that much of the notional value on a given day.
Well, but also think about this. All those products in the structured world trade bigger size than they trade on the floor. So
that's the crazy thing. Upstairs is doing bigger than the floor, right? Right.
There's an upstairs market in those instruments that dwarfs what goes on the floor. And, it makes you one of the kind of discussions we had at this conference I was at last week is what's the underlying? Is it the SPX or is it the Spider? And how does that impact the VIX calculation? And we won't solve that today, but it shows you how over time the world has evolved.
I would argue that the underlying is neither, and it's probably the S&P 500 future.
Yeah, well, as I say, it's an interesting argument because it impacts the VIX, because if the SPX isn't the indicator, then there's challenges in the volatility calculation. But it's conversation for another time.
All right, and with that, we will close out the old Express block and jump right into Around the Block.
Around the Block.
And welcome to Around the Block. This is indeed the portion of the show where we discuss what's coming up on the horizon, what's lighting up our own personal screens, our own personal tapes in terms of what we're watching for the next few sessions going out through the rest of the week. And of course, on the big number everyone's watching this week is, of course, the non-farms coming up on Friday, but we can discuss that more on Thursday's show, where, of course, Mr. Seabass will make his wildly inappropriate estimate of what the non-farm number will be, and we'll go from there. And then, of course, and we talked also earlier in the show about the slog to the downside in VIX. Mark, Mr. Seabass, Sebastian, you're still positioning to the downside. Are you increasing? You maintaining steady at this point, or obviously you're still looking for VIX? You think by next show, you think we'll break the 30 handle?
I mean, the only thing stopping it is non-farms at this point. I wouldn't be surprised. They're gonna, when the VIX gets this high, they are pretty aggressive about pricing out these long weekends. So my guess is that if I had, if somebody said that I had to pick a side, I would probably put the VIX below 30 by the end of the week. So that's just my general inclination. There's slack. I mean, they're gonna try and take at least a point out by Friday after non-farms, but maybe
it is going to
more.
be fun to watch that interplay, that push and pull between the guys wanting to get the hell out of Dodge and take their time decay by Wednesday, and of course the fear of non-farms keeping that in reserve. Normally a long weekend we would be done with this much sooner than Friday, but I think they'll be keeping their powder a little drier this week. Once non-farms comes out, that number is anywhere even close to in line. You watch that weekend, the rest of that weekend come out in quite the hurry. So yeah, if you're holding long premium post non-farms, good luck to you, sir.
Look out.
And Uncle Mike, what are you watching? Obviously, gold and silver, your big holdings. You still you double down here at Ford, down at the 10 handle. Maybe pick up renew your interest in Cisco down at 15. What else has been lighting up the tape in KYO these days?
You know, the one that caught our attention here recently is Arco, which is the South American, Latin America, Caribbean line of McDonald's. We like it. I think it's been around for about 4 or 5 months here. I'm just pulling up the chart. But
yeah, there was a big deep trade at McDonald's today. 10,000 of the 80s went off. No, 36,000 of the 80s went off with the stock at 90 in the front month. Anybody have a sense of what was going on there?
I'm just looking here at the numbers. I see.
I didn't see it. I mean, we're long McDonald's slightly, nothing major position, but we like the strength of McDonald's, so that's what got us looking at Arco. And we basically last week we sold the Nove 22 half puts cash secured just as a yield grab. Like Alex mentioned before, the whole market, there's no yield in the market anywhere, and if you can get creative to show somebody, hey, here's a chance at getting $1.50 on a cash secured put. Stock's trading at 22.5, or the puts at 22.5 put, the stock's trading at 25.5. So you got a little bit of a buffer. If you end up owning the stock, we can come in the next month and sell the calls against the stock position. So that's basically how we've been playing the individual issues we've been looking at.
Yeah, here I'm just trying to parse that trade that Alex was talking about. These SEP 80s look like a ton of them did go up. They were lifting them earlier, and then looks like they then maybe dumped them out later on. Looks like there's some weird reporting going on, but 6,500 blocks going up repeatedly of these SEP 80s here in McDonald's. Stock went out near 91, 90 and about a half, 90, 70. So yeah, a lot of deep in the money call trading front month here in McDonald's. Maybe someone trying to get out of their stock and just dumping some in the money covered calls. But who knows with this one? We'll have to parse this a little more with the show winding down. I don't have time to really dive into this, but it's an interesting one to parse. We don't see too much McDonald's lighting up the tape these days, so this will be an interesting one.
I agree with you. It looks like someone's trying to hedge some stock going into this month.
I mean, this is something's going on here in live vol with the McDonald's. This listing, they did 1.2 million contracts today. Unless is there oh, you know what? It's a div play. That's what it is. That's what all these deep ones going on. They have a dividend going up today. Because they did this McDonald's does 17,000 contracts a day. They did 1.2 million today. So and it's all deep in the money crap. So yeah, it's a div play. Yeah.
So it's got to be divs. Yeah.
Yeah, it goes ex dividend tomorrow.
Yeah, it goes ex dividend tomorrow. So there we go. Mystery solved. Ex div. That's why we didn't have it up on the site. Our contributors are a clever lot. But aside from metals, and then Alex, what do you guys? I guess your days these days for Around the Block is mostly spent building this mysterious new OX educational apparatus, correct?
Yeah, but I would still markets like this. I would own some premium. Pick something, whether it's Amazon or gold, and going into a 3-day weekend. I understand vol's up. I understand it's expensive, but you get these periodic huge events in the market. 2008, 2000. I think there's still a lot of volatility. I think this story is yet to fully unwind, and I'd be willing to spend a few dollars taking some premium home for the 3-day weekend. I'm not a big proponent of the VIX for retail investors, but doing something in the VXX where the ETF does all the heavy lifting for you and all the rolling. I'd like to go home long some premium for this long weekend. There's still too much that can happen.
Alex, would you look at doing like a call spread, to parlay some of the vol risk, or do you like owning the premium as just like to be long vol in general?
You know what? After the few weeks we've had, I think spending a little money on outright premium is a decent risk reward. I think you can be wrong and you lose some money and you'll pay up because vol's still pretty expensive. But if you get, these events we've had, I mean, think about the last couple of weeks we've been through. You've got a market that, as of today is back to break even for 2011, you're going to look back at this period and say, wow, I wish I'd owned some premium here look at the size of the moves.
We certainly have seen our fair share of weekend risk over the past few weeks. We saw the S&P downgrade a few weeks ago. We saw the big, of course, Google acquisition coming in a week or two ago. Week after that, there's been a lot jobs stepping down recently. There has been a lot of overnight and weekend action, so it may not be the worst time to own some premium. Of course, Alex, your best friend there, Don Schlesinger over at Volex, he may have some words for you if he hears you recommending to go long premium. His trading philosophy is sell or don't sell. But
yeah, you know what? That's most people's trading philosophy, and I get it. But when you get these large events, we just came through, a pretty remarkable event. The mindset of most investors, the mindset of a lot of people in the options market is, premium selling or strategies that, erode should be the core part of my portfolio. And I don't disagree with that. But you get these large events and you look back in hindsight. I mean, look at the S&P downgrade. We all knew it was coming. It was no surprise. And they take 10% out of the market. It doesn't have to make sense. It happened. You wish you'd been long some premium in an environment where they took 10% out of the market. Even if you were directionally wrong, yes, you lost money, but the risk reward of a bet of that nature in this environment, I think you should commit some small portion of your portfolio to a long premium play.
Well, and then I think Mark was probably talking about this, but I think that the way they measure realized volatility is just wrong. I don't think realized volatility is close. I think realized volatility is kind of highs and lows and swings, which, in many ways changes the games and makes your point an even stronger one that, you've got to have those, we used to call them on the floor, units to make sure you don't go out of business. I mean, I had clients that, were premium sellers, like you said, but they also had a bunch of units that they were selling at 60, 70, 80 bucks off of this SPX, off the S&P downgrade. And because they had spent 5% of their cash on some units, they ended up breaking even, or even some of them turned a little profit on it.
Yeah, well, here, again, I don't want to disclose how old I am and how long I've been in the business, but, I knew guys in the OEX who literally came in every month and said, irrelevant of what my market making is going to be, I start the month by buying 300 of the littlest puts and 300 of the littlest calls. He says, I take them off my sheets, so I trade as if they weren't there. And then you look at them and say, how long you been trading? And they say 6, 7 years. How many times have those trades made you money? Rarely. How much did they make you when they made you money? They saved my life, and they made me an incredible amount of money. So I think we're in an environment like that, black swan, whatever you want to call it. I think you want to own some premium here. I don't think it should change your whole trading style. And spreading, we all like spreading. We all like the risk management trade. Spreading is, terrific, and it's a core strategy. You should spread. But spreading also is cumbersome when you get these big swings, because you got to wait for the other leg to come in. You got to get closer to expiration. I'm not telling anybody to change their trading style and just become an option buyer. I get asked the question all the time, what are the two most successful option accounts you've ever seen? And one was a premium seller, and it's a well-known story for another day. The other one was a hedge fund. The guy whose money it was a former NASDAQ market maker, and he had a PM working in his hedge fund that just bought leaps. And you say, well, I can tell you 50 things that's wrong with that strategy. Fundamentally, they were good pickers. They were terrible market timers. And you think of all the trading opportunities you've had in the last couple weeks, timing has been challenging, and spreading could have handcuffed you. Own some premium. You're going to get big events. I don't know if they're going to be up. I don't know if they're going to be down. VIX going back to 20. VIX going to 40. I don't want to sit through the expirations. But I'd like to own some volatility here. And if it means, simply buying a strangle in the VIX, buying a guts trade, not the VIX, the VXX. VIX if you can tolerate it. But in the VXX or another instrument, I think there's an opportunity here for a couple home runs.
Yeah, I think there's definitely the argument to be made, like we used to say on the floor, and like Mark mentioned, to have some units in your back pocket for days like these, and maybe you do take them off your sheets or you keep them in a special reserve account for emergencies, the Nassim Taleb Black Swan account, as you alluded to. But yeah, there is. From what we've seen just over the past few weeks, the weekend risk and the overnight risk is substantial these days. So it may be worth your time to, even if you are one of those degenerate premium sellers we like to joke about all the time, to have a few units in your back pocket.
Well, look, they took $100 out of gold the other day, right? Just the rumor that Bernanke had time allotted for a press conference. What happens when you get another day when the gold ETF is selling or the gold ETF is buying to catch up? How big of a move are you going to get, right? I'd want to own.
Yeah, the new rumor
premium.
now is that, of course, Obama is positioning to make some big announcement on housing sometime in the next few weeks. So maybe that will play into the long or short premium argument as well. But that is going to do it for this episode of the Option Block. I want to thank all of my usual partners in crime and one new/old partner in crime for joining us today. And starting off with you, Uncle Mike/Auntie Mike Kavanaugh. What is going on over at Know Your Options Inc. you want to let our listeners know about, sir?
We're just moving into we've been around for 5 years territory. So we're looking at having a 5-year anniversary party date to be announced very soon. So to all of our listeners and our affiliates, keep your days open in mid-October because we're going to have a 5-year anniversary party. Other than that, same old, same old. We've been getting a lot of calls from people that wish they had options incorporated into their portfolios and, trying to find out to learn how to do so, whether it's covered calls or collars. We've been talking to a lot of people about insuring their portfolios.
I imagine these are boom times for defensive players like you guys to really jump into the front seat and really bring in some new clients.
Yeah, indeed. It kind of plays to what Alex said before, the low yield environment. Do I want to put money in U.S. Treasuries where I'm making 25 basis points on a 6-month T-bill? Where am I getting paid for the risk I'm taking on? Do I want to put money into the equity markets where, I have a shot at double-digit returns, but is it worth the double-digit swings? Incorporating options into a portfolio kind of gives you an intermediary of risk-reward. You're taking on bond-like risk with equity-like potential. So it definitely is keeping us busy over here.
Mr. Seabass, Mark Sebastian, what is going on over at OptionPit.com? Maybe regale us a little bit about these bronze, silver, platinum, and gold plans that you're working out there.
Yeah, well, we're revamping some of our educational system. We're adding a kind of medium tier of education to make some of what we really teach a lot more accessible. What I'm actually really looking for right now is we're looking for high-end traders that are interested in interacting with other high-end traders that want to really dig into some of the different market issues out there and really talk with other guys that are trading some serious type of aggressive and more advanced strategies. And we're looking for applicants into kind of what I call my professional traders group. Now you have to qualify, but we're looking for applicants into the pro traders group. And then the other thing is that, and this is an inexpensive way to really learn, I'm teaching the how to trade the VIX class on September 10th with the SIBO. And then the follow-up to that is I'm doing a 5-part series on trading. It's called A Trader's Guide to Volatility. Now, it's a $395 course, but if you use code OI2011, it will take 15% off of the price. All right, so instead of $395, it'll be right around $350 for a good 7 to 8 hours of education. You can't ask for much more than that. If you do both, I'll make you a special deal. You do the How to Trade the VIX seminar at the SIBO with me and Russell. I'll let you do my course for $50. That is how much I think the two go
Quite
together.
the deal, sir. That's our listeners should jump on that. So if they register for the SIBO one, how do they come to your site? Is there a different code they should use to register?
Now, you know, I'm gonna have to do it because I need to see the receipt. So just email me the receipt, and then I'll refund you back the difference.
So go register for the SIBO show, and then shoot Mark an email, mark@optionpit.com, and he will credit you with the difference and maybe throw in a Slinky or two.
Yep, and I'll even autograph your copy of Russell's book.
I'm sure our listeners have appreciated how the way the Yeti picks up that Slinky in ever deeper and more lustrous tones. And you know, I think Skype likes your new microphone too, because you haven't dropped out once this entire time.
No, so no more editing out of my
Now we'll have no
comments.
excuse for having only 30 seconds of Sebastian per show. All right. And Mr. Jacobson over at Options Express. Obviously, you can't discuss too much about what's going on for you over there, but any interesting live events coming up at Options Express you think our listeners should know about?
Actually, you should check the site. The crew was out in Boston this weekend and picked up a number of people from another option
Good timing
event.
for them then.
Yeah, well, they made it back, but there's an OX event pretty much every week. So, you know, check the site. You can see the geography, and we're out there with education. Come to the site. There's lots of education. Obviously, a big proponent of education. Look at all the free stuff that you can get out there. Look at what the SIBO does. Look at what the OIC does, the individual exchanges, the ISC, outstanding podcasts like yours, Mark, and lots of stuff that's out there in the world of podcasting and broadcasting that's available to people free of charge. You talked a little bit about my buddy Don Schlesinger, and you know.
Are you friends? Are you and Don? Can you imagine doing a show with Alex?
Alex
and
has
Don at the
proposed
same
it.
time?
I'm toying with the idea.
That would be
Don?
like crossing the streams in Ghostbusters.
Don is the smartest man in the world when it comes to options. When I first met Don, he was running education at Morgan Stanley, and on a number of occasions, he took me to the woodshed and taught me things that I wouldn't have gotten anywhere else. But Don is he was one of my mentors, but he is the smartest man in the world. Kudos to you, Mark, for doing the Vol show. You know, volatility in the options market is something people ask me all the time. What's the difference between a good trader and a great trader? And they say a good trader is making a trade based on, you know, trend and time. A great trader is making a trade based on trend, time, and volatility. And having that volatility component, I know some people don't want to get that complicated, don't want to get that sophisticated. But, you know, to folks listening to the podcast, think of a bad trade you may have done. And a bad trade isn't only being wrong. You know, I bought the calls and it went down, but I bought the calls, it went up, and the calls didn't make any money. You really have to understand volatility. So that's
Right,
sort
well-
of trap you won't fall into again.
Mark and I like to say that with options, you have to be right twice. You have to be right on, if you're playing spec, you have to be right on direction, and you have to be right on volatility.
All right, that is going to do it for this episode of the Option Block. I do want to thank all of our listeners out there for downloading and streaming and subscribing to the show, including to the new feed, and making it such a success. And if you do like Alex's suggestion of the Volatility Show and our other podcasts, and indeed this show, and you missed our live spectacular last month, we will be doing it again coming up in a few months here at the FIA Expo in Chicago. We're just hammering out the details now, but we will be.
Now, so does that mean is it BYOB for that one then?
Well, this one's going to be on the live in the FIA set on the floor. So it'll be a little bit
BYOB.
different. Yeah, probably. We'll get a drink from the passing waiters. But we're going to do some shows live from FIA right in the middle of the craziness down there as well. Well, we have there's a Tuesday and a Wednesday. We have a 4 to 6 p.m. slot on Tuesday. We're going to do two shows then. We have a 1:30 to 2:30 slot on Wednesday. I haven't worked out which shows are going to go where yet. But it'll see what works for everybody. But we will have at least an hour for option blocks or odd blocks or option blocks somewhere in there, and it will be live in the from the floor of the FIA Expo. It sounds kind of fun. So yeah, that is going to do it for this episode. I want to thank all of our listeners for downloading and streaming and subscribing to the show and making it such a success. And we will see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.